In this video, I'm going to walk through the exact formula that you can use to determine whether you should or should not use the BRRRR method in real estate investing. What's up, YouTube? Welcome back to the Cleveland Investor Primer channel. My name is Rob, and I'm here to provide you with useful, unbiased content for real estate investing. If you're new to the channel, please consider subscribing down below and tapping the bell icon to be notified anytime I publish a new video. As lots of people watching this may already be aware, the BRRRR method has really been taking the online real estate investor community by storm for the past couple of years. If you don't know what BRRRR actually means, just kidding. The BRRRR strategy actually stands for buy, rehab, rent, refinance, and repeat. What this basically means is that you seek out and buy a property that could use some work to get it up to snuff. Then you do a rehab, putting some time or money or both into the project. You then rent it out to tenants, and then once it's fully rented, you get it refinanced to pull out the funds that you put into it. And then, of course, the final R is repeat. So it becomes this cyclical kind of process. BRRRR being, buy a property, rehab it. Once it's done being rehabbed, you rent it out and then refinance it, recouping your cash, and of course, doing it over and over and over again. Now, personally, I think I would like it better if it was called the PRRR method instead, but BRRRR already has the traction, so we'll just have to stick with that, at least for meow. Over the past couple years, the BRRRR method has really blown up with bigger pockets posting about it and publishing content about it every chance they get, and with videos from popular YouTubers like Graham Stephan, Marco with Whiteboard Finance, and of course Clayton Morris with the ever so reputable Morris Invest. The big idea is that you can really use the BRRRR method to scale your holdings and propel your wealth pretty quickly. And there really are lots of people who have used this method quite successfully over the past few years, mainly with single-family houses, but occasionally with multifamily properties as well. With all the hype around the BRRRR strategy, I'm seeing tons of interest in it, ranging from total newbies to seasoned pros out there wanting to find BRRRR deals and really scale their portfolio, scale their wealth. But seldom is asked the question of, is BRRRR right for everybody? And who should or should not be pursuing BRRRR deals at this point in time? So to solve for that, I actually created a formula with 10 questions that you can go through and honestly answer to come up with really what your score is and figure out if BRRRR is right for you at this point in time. So you'll probably want to grab a piece of paper and a pen, or maybe just queue up the Notes app on your phone to keep track of this as we go along. I'm going to go through each of the 10 questions one by one and explain why it's relevant, and then kind of give you the score that you can plug in for each of those 10 questions and ultimately land at what your total score is, so you can see if BRRRR is right for you at this time. Now, keep in mind that none of these things are set in stone, and circumstances change over time. So regardless of what your score is today, you may revisit this formula and plug in your circumstances, a month from now, or 3 months from now, or a year from now, and find that you actually get a very different score as your circumstances evolve. Without further ado, let's jump into the very first question to see if the BRRRR method is right for you at this point in time. The first question is, what is your level of familiarity with the specific area in which you're plotting your deal? This is obviously extremely important to ensure that you understand the dynamics of the specific area before you jump into a pretty significant commitment. Think of this like a business. So you're starting your own business and you're basically the founder / CEO, and it's really important that you know your industry, which in the case of a BRRRR deal or any kind of real estate investment deal, it means knowing your specific market, knowing your specific area in which you're working. This would be true whether you're starting a restaurant or founding a biotech company or starting some new line of clothing. You want to really understand the market in which you're playing before you jump in, and it's really an important parameter. Because the more you understand the specific industry or market, the more likely you are to succeed. If you're extremely familiar with the market, meaning you know almost off the top of your head what properties have sold for over the past several years, who owns what properties are owner occupied, what properties are rentals, and what the rents are of those properties, give yourself 10 points for this question. If you have some basic familiarity, meaning you know at least the basics of what the trends are, what properties are selling for, and you're comfortable searching the data as needed within the area, give yourself 5 points here. If you have little or no familiarity with the area beyond what you've been told or read in online forums or seen on YouTube videos, give yourself 0 points on this one. Remember, be completely honest with yourself as you answer this question as well as any of the forthcoming questions, because if you don't give the most honest answers, you're really only cheating yourself. Moving on to the second question, what is your level of time availability in your life? Even if you're not doing the physical rehab of the property yourself, when you take on a BRRRR deal, you're going to find that the amount of bandwidth that gets taken from you is pretty significant. And often when you least expect it, things crop up and you'll have to devote sometimes a ton of attention to those things. If your current life schedule has plenty of flexibility and you can easily carve out significant chunks of time to devote to the BRRRR, give yourself 10 points here. If you're somewhat flexible in terms of your personal life schedule, but you do have to navigate around some commitments, give yourself 5 points. If your schedule is perpetually overbooked, whether because of an intense career like management consulting or family obligations like shuttling 3 or 4 kids around to different activities all day, every day, or some other combination of things like this, give yourself 0 points on this one. The third question is, what amount of rental property ownership experience do you have? The second R in BRRRR, of course, stands for rent, and people often forget that rehabbing a house to rent out to tenants is often a very different beast than rehabbing a house to live in yourself or to sell to others. So it's extremely helpful to already have some landlording skills in your toolbox before you jump into any BRRRR deal. If you have substantial experience as a rental property owner, say 3 or more years or 5 or more properties, give yourself 10 points here. If you have at least some experience as a landlord, so you know most of the basics, give yourself 5 points. And finally, if you have no prior experience owning any rental property, sorry, no points for you on this one. The fourth question is, what kind of contractor connections, or alternatively, construction experience, do you actually have? It's always hard to go out there and find high quality craftsmen and contractors, but when the economy is strong, it's next to impossible to actually go out there and find them, at least at a reasonable cost. For this reason, it's super important to already have a plan in place for how you're going to go about the rehab before you embark on the actual BRRRR journey. If you're in a situation where you have the skills and intend to do the rehab work yourself, or you already have established relationships with solid contractors who are ready to tackle your project, give yourself 10 points here. If you've at least got some rudimentary ability to get some of the work done yourself, and you've also spoken to some contractors to get aligned on realistic expectations, give yourself 5 points. If you have neither the ability to do the rehab work yourself nor the contractor connections, give yourself 0 points on this one. The fifth question is, how far are you in physical geographic terms from your deal? Even if you have a great contractor on the job, there are times when it's highly beneficial for you to be on site, whether that's to monitor progress, make decisions, or even just let a utility worker or vendor into the property. If you are local to the metro area where your BRRRR deal will be, score yourself a full 10 points on question 5 here. If you're not quite local, but you can get there easily and often, maybe a few hours by car, for example, give yourself 5 points here. And finally, if you're far away to the point that you'd be driving for hours and hours or even hopping on a plane, give yourself 0 points on this one. The sixth question is, do you have a property management system in place to plug right into? From the surface, this question might sound very similar to the third question, which was how much rental property ownership experience do you have? But it's actually a different beast because one might have plenty of rental property ownership experience in a different market, but really have no system in place ready to plug into in the market where the BRRRR deal will be. When you already have a property management system in place where your BRRRR deal will be, you can rest assured that any local jurisdiction requirements will be taken care of and be much more confident that you can get the property occupied with as little downtime as possible once the rehab is completed. If you have the wherewithal to self-manage and plan to do so, or if you already have an established relationship with a local property manager that you're happy with, give yourself 10 points on this one. If you've at least had some preliminary discussions with local property managers and you've already found one that you're comfortable signing on with, give yourself 5 points here. If you don't yet have a plan in place at all yet for property management for your BRRRR deal, you get nada on this one. The seventh question, which is probably the most straightforward and clear-cut in this formula, is how good is your credit? The third R in the BRRRR acronym, obviously, is refinance. Particularly for an investment property mortgage, you'll need to have a pretty solid credit score in order to secure a reasonable fixed rate on a mortgage. So this is definitely a critical factor. If you currently have excellent credit, say a score above 750 or so, you'll likely have no trouble getting a mortgage, at least from a credit perspective, and you should give yourself 10 points on this one. If you have good credit, say 700 up to about 750, give yourself 5 points on this one. And if your credit is fair or worse, sorry, you don't get any points on this one. The eighth question, which is one that it seems like nobody else anywhere is talking about, is what is your level of liquidity? Like it or not, sometimes things can come up on a BRRRR deal that will cost you a much heftier sum than you expected, no matter how much due diligence you put into it ahead of time. A rehab that was projected to cost $15,000 could end up costing $30,000 due to some unforeseen circumstances. Or your new tenant could go rogue a month into the lease, or the house next door to your property could end up being sold in a fire sale, which could really hurt your valuation when it comes time to refinance. Any of these things could come up and require that you dig into your wallet and pony up a lot more than you ever expected, or just entirely derail your BRRRR deal. That's why it's always very helpful to have substantial reserves to access if necessary. If you're in a position where you have large amounts of cash or cash equivalents at hand, give yourself 10 points. If you could access substantial cash, if absolutely necessary, by liquidating stocks or perhaps tapping into an existing HELOC or home equity line of credit, give yourself 5 points. And if you have little or no additional cash or cash equivalents available or even accessible to tap into, give yourself a score of 0 on this one. The ninth question in the formula is, do you have a consistent documented income? In order to qualify for the mortgage after the property is rehabbed and rented, you'll need to have a stable documented income and not be in a situation where you're living paycheck to paycheck and the entirety of your income is basically consumed by your current lifestyle. The most ideal and easy to document form of income is in the form of W-2 income from a traditional job, and a close second is investment income from stock dividends or other rental income. If you have stable, consistent income either from a W-2 job or cash flowing long-term investments and your income generally exceeds your expenses, give yourself 10 points for this question. If you are in a situation where you do have consistent income from a W-2 job, but you're pretty consistently living paycheck to paycheck, or if your income is from self-employment, give yourself 5 points on this one. And if you either don't have a consistent income or your consistent income is just not sufficient to pay for your current lifestyle, give yourself 0 points on this one. The 10th and final question in the formula to determine if BRRRR is right for you right now is a pretty subjective one. This question is simply, what kind of personality do you have? Without fail, in each stage of the BRRRR process, you're going to encounter things that are going to try your patience and try your sanity. So personality actually is pretty important when it comes to figuring out if BRRRR is right for you. If you are genuinely someone who enjoys being victorious over obstacles and challenges and finding your own success by being resourceful in everything that you do, give yourself 10 points here. If you're someone who can navigate hurdles and adversity when necessary but generally prefers not to, give yourself 5 points on this one. And finally, if you're someone who is usually anxious about facing potential difficulties, even to the point of losing sleep over things that might go wrong, give yourself 0 points on this one. Now that we've made it through all 10 questions, it's time to finally tally up your score and figure out if BRRRR is right for you at this point in time. Before we get into the actual results, I want to just say that regardless of what your score is, it doesn't necessarily mean that real estate investing overall is or isn't right for you. This really just is about the BRRRR method, and there are plenty of other ways to invest in real estate, even if the BRRRR isn't right for you at this time. Now, assuming you've been tracking your points on paper or some other means for each question as we've progressed, just go through and add up all of your points in total now for all 10 questions and make note of what that score is. If your score ultimately added up to 90 or more, then you are actually in an extremely good position to use the BRRRR method to grow your real estate portfolio and expand your wealth. If your score landed at 80 or 85, you're in a decent position to try the BRRRR method without the likelihood of too much trouble. If your score landed between 60 and 75, it's starting to get into sort of marginal territory, and though you might consider using the BRRRR method, you'll want to do so with a pretty high level of caution. If your score is below 60, I'll just say flat out that the BRRRR method is not a fit for you, at least at this time. That's not to say that it won't be in the future, particularly if you address the areas that are dragging your score down. Think of the metaphor of swimming, for example. If you attempt a complicated high dive before you even know the basics of swimming, do you think it's likely that things are going to go well? So translate that to real estate, and if you're just starting out and you don't have any experience, there are plenty of other things you could do to kind of get your feet wet and start to, learn the basics of swimming, so to speak. Maybe that means buying a turnkey property in an out-of-state market, or maybe that means buying a live-in multifamily, so a duplex or a triplex, and living in that property while you maybe do some repairs to the property, do some renovations and improvements, and get your feet wet in that landlording world. No matter what you do, just keep in mind that not every strategy is going to be right for every person at every point in time. If you found this video useful, please smash the like button down below. Share the video with someone else who might benefit from it, and subscribe to the channel for more real estate content like this. This is the Cleveland Investor Primer channel, and I'm Rob. Thanks for watching.